Hello everyone, it's the Crypto Cowboy here. It's Saturday morning in Chicago and coming to you, we are on the 14th of December and coming to you with a kind of weekly overview of the Bitcoin market. Just to recap and kind of continuing on the video that we've done last week on it. So yeah, let's take a look. So I still keep track of about 3 counts here. And I kind of alternate in between them because I don't think we have enough information here to find out, what's happening with a high degree of confidence, right? And this is one of the important points in Elliott Wave principle, as we keep looking at different counts, and slowly some of the counts are going to disappear from the view, and then something that's more accurate and more in line with the principle, it will eventually come up. And it's the only way to look at the markets, by doing this elimination game into the counts and coming up with the most probable situation. So I'm going to start by looking at the spin count. So just as an overall thought here, we're struggling. Basically, I hate to kind of start on this negative note. We are kind of struggling into the price, and it doesn't give me a lot of confidence. I've been going this week, through some boosts of confidence. And if you guys are part of the room, I posted a couple of comments and, got some charts on there. But I want to see more from this market, and the lack of interest and impulse that I see into the market, it kind of concerns me. And I know, if you look at Finex, right, the positionings in the long is extreme. So I think, the volatility is very low. The volume is kind of low. So I think something is about to happen. Either we're going to get a huge flush to the downside, or maybe a quick flush, and then we're going to, spike up and start a new bull trend. But I think we're slowly approaching here, some important metrics. And I just want to give the market room to work itself out, right? If you look at the principle, it's all about investor confidence and investor sentiment. And Elliott Wave principle deciphers quite well the social mood of people. And in any asset class, you will see that the markets will go through these periods of excitement and then desperation. And, you guys know all about it. But it's been a long period of consolidation, a long period of basically correction ever since we found, some kind of highs here back in June, right? So we're almost 6 months into it, and it's dragging itself. It's kind of toying with us because, from a simple, correction here from this double zigzag, we're going to a double three, then we're going to a triple correction. And we still have room to go on the die side. I mean, if you can look here and you can see the 618 retracement into the second wave, why wouldn't this be a target for the market to touch? I mean, Litecoin and Ethereum came, pretty close to 786, and Bitcoin is not nowhere near this. So if I was to think of an extreme, drop into Bitcoin, or even of a deeper correction, I mean, the 786, it's something that can definitely happen. So I'm not going to argue with the market until the market tells me, hey, we're about to go up here. And so far, I mean, if you look, we've gone up since December, basically last year, to June. And ever since then, we're in this downtrend channel. And there is no arguing. I mean, we can think about, all the fundamentals that are happening behind, or the conference, or the people that are excited about the project, about the cryptos. And it's all nice and gravy. But for right now, the price of Bitcoin, it's coming down. You can see the channel. There is no arguing that the price today, it's at 7,100, and we were at almost 1,400, so we've been cut in half. And also, there is no arguing that this is a corrective pattern, right? So this is what kind of gives me confidence into looking and saying, okay, at some point this thing will finish. Even if we drop below this channel, on a quick drop down here, maybe into the 618, then we can start building something impulsive. So if anything, we got to let it finish. And for right now, like I've said in my other videos, it's got the nice characteristics of a corrective pullback. And we all know that after an impulse, we're getting a pullback, we're getting a corrective, and then we got to get another impulse. So that's basically all it is into kind of reading this market. So we're all kind of waiting for this to be done and then to embark into a new bull trend here. And, you know, this could be basically an A wave, this could be a B, it doesn't matter. But it's clearly a difference between an impulse and between a correction. So with that kind of out of the way, let's look at this pin count basically. And you can see how on this one we have the WX, we have the Y wave, and then we have an ABC here, and then we have another connector X, and then we're coming down. So if this is an A wave, then I got to have a B wave here, you know, that's got to finish up before we drop back into the C. And I have trouble still, you know, looking at this and considering the B wave just yet, because if you look up here, we've only pulled back to the 38.2, right? And this is more characteristics of a fourth wave. And I'll go to the other count and I'll show you that. But, you know, if it's a B wave, I want to see, you know, these B waves go at least 50%. Maybe 618 is even more ideal, right? So every time we count B waves, we wanted to see, you know, a little bit deeper retracement than 38%. And for right now, this is all we've got. And now, you know, you can make a triangle out of this, but it's not ideal. And I kind of think what throws, you know, all the other Elliottians off too, you know, myself included here, is this wave up here, this A wave. It's in 5 waves. And I'm going to go to the other count and count it as a 4. It's possible, and it's not illegal. I'm not breaking any rules, but it counts better as a 5-wave move. So if it's a 5-wave move, and now we're getting a corrective here, we got to get another 5-wave move up to complete this C leg of B. So if we're doing an ABC, we got to get this pattern complete. If I go to a 3-hour chart, you can see, right? So you have a 1, 2, 3, 4, 5. It's not a leading diagonal because, you know, there is a small, I don't even think there's an overlap. I mean, we can go and argue and, you know, look at different platforms possibly. But you know, after following a leading diagonal, I want to see a pullback into the 786, you know, that's pretty deep here, and then a sharp rally move up, right? And this hasn't happened. We're going sideways. So if it's a wave 1, then I'm going to allow for this ABC coming down into this B wave to be a little bit sloppier and a bit longer. But we're getting way out of proportion with this wave 1, right? I mean, if we would have stopped here as a wave 2, it would have been ideal, and then go up, right? A, B, C, clean pattern down. But now we're going A, and we're dragging into this B. Could I count it as a triangle? Not really. I got 5-wave moves up here, and this is not a triangle. Okay, triangles start with a 3-wave move. You would need to have 1, 2, 3, and then 1, 2, 3, and then so on, and build it up like that. You can't go A, B, C, D, and E, and then coming down, because it just doesn't make sense. You need. I mean, I'm breaking the rules. You need 3-wave moves up here. Now, yeah, if I do count it as a 4th wave, then it means I can count it as a 3-wave move too. But even then, as a part of a triangle, this A wave should have been a little bit lower here, you know, and in 3-wave move. And up here, I think I kind of have a 5-wave move. All right, so it's you know, there's several interpretations, and this is what makes counting this notorious corrections hard to count. And in situations like this, it's just better to stay out and let the market sort itself out. It's one of the basic things that Elliott teaches us. If you've got no business, I mean, if you're scrambling, you know, for let's say 30 minutes to find a wave count in here, that means maybe we don't have a wave count that we can look at, and that's fine. And that's fine. Eventually will happen, and we will have some sort of a you know, resolve into this craziness up here. And you know, you don't have to be part of it. You don't have to trade it. Just let it figure itself out, and then we'll find out. If it's an A, B, and then we got to go back up in C, that's fine, right? So I'm looking at this as being a wave A. I'm pulling back into the C lag, right? So I go A, you know, maybe this is a B up here, you know, some kind of an ABC up. And now we're doing a 1, 2, 3, 4, and 5. Come down in B and then go up in C. That's okay. But here is this. Okay, I'm going to look at this, you know, time in the time frame about a 6 hour, and I'm going to go up in C. I want to see this move up here, right? So it's going to be something like this. I want to see this B wave, right, go towards at least 50%, 618. So this market needs to get going. Otherwise, we're going to drag this, and then if we're going to go, we're going to break the trend line. Okay, and then so the more we spend up here, the more this is going to become like not part of the equation. So I'm probably going to give it another, let's say, a couple of days here as a wave B to develop down into the C leg. And then we want to see a nice sharp rally up into the C so we can complete this B in this wave count and then go back down in C. All right, so not a lot of dragging down here in the near future. So let me go and look at this as a fourth wave, right? So into this green count, I'm going to go with the daily. And what I have is I have W, triangle X, and yeah, you can count it also as, like we've done it before, W, X, Y, X, Z. But basically, I need a C leg down here. So if this is, basically, what I'm saying is this X, maybe I was wrong before, but this X can go up here, right, instead of a triangle, and then, you would still have the same pattern, because you can count this in three waves too. So anyway, you can go W, X, you can go A, and then you can have a flat in B, and now you're doing the C leg down, right? So basically, my whole argument is like, how do you make this a fourth wave? So you go 1, you have 2, and now you have a sharp down in 3, 1, 2, 3, 4, and 5, and now you're doing this fourth wave up, and now we're starting to do this fifth leg. We come a little bit lower here to complete a fifth wave, and then we're done, and then we're finishing this correction. So going up to the 6-hour chart, the way I would do that is like you can do a WXY. Not really happy with this X. I want to see this X deeper, right? This X wave should be a little bit closer to this B wave. So it's a very short wave. But you can make sense of it. You can go and say, okay, this is a W. You have an ABC up. You have a very small connector X, and then you have another three-wave move up. You go A, B, and then C. So it's kind of sloppy. I'm not, 100% that this is the correct wave count, but markets can surprise you, and this can be. What are you going to do if the market moves down, right? This has to be a three-wave correction, and that's what it is. So you're going to go fourth, 1, 2, 3, 4, and then you have 1, 2, 3, 4, 5, and 1. This is some kind of a second wave. And now we're doing a 1, 2, and then we're sharply dropping down in a third, fourth, and 5 to complete this. Okay, so that's how I would count it, because in a triangle, it's already way too big with the, comparing with this wave 2. Not impossible, but like I've said, I can't count it as a triangle just yet. So maybe if you look at it this way, you have a couple of counts pointing downwards as a fourth and as a triangle, and you have a couple of counts pointing up as a 1, 2. Or as an ABC. So, like I said, it's anybody's game down here. Let me save this up. I'm going to go to this green count as well. So on this one, I think what I have is saying that this wave count is completed. Very sloppy ABC down here to complete this second leg, right? So way out of proportions. There are counts like this. So if you go and look at the 1930s market, S&P 500 market drop, right? So when we had the great depression, there was a count there that was like basically something like this, where you had an AB, and then the C leg down was extremely sharp, out of whack with wave A, but that's how it's been counted. So it's possible, but basically on this one you have a WXY, you have an X connector, and then you're doing an ABC, and we're done. So if we're done, then why is the market still not moving up just yet, right? So maybe because the investor confidence is still, doubtful, right? We're still thinking, well, maybe we're done, finished, and you can see this kind of thoughts going through my head as I explain the wave counts, right? This kind of debate that I have going on regarding the wave principle. So if I go 1, 2, 3, 4, 5, okay, this is a nice impulse, right? We have a motive wave from the lows. We're not breaking any rules up here, and then we're coming down into this W, X, and Y. So you have a W. You can do an A, you can have a B, and a very small C down here. Connector X, I love it, right? Go up, full everybody, and then you go A, nice impulse down. This B kind of sloppy and back, right, all the way up here. So let's say, let's say this is a flat. No, it's a zigzag. So you have impulse, three-wave move up, and now you need another impulse down. So you need a 1, 2, 3, 4, and 5 for C. Okay, so let's do that. Let's see if the market comes back here as a wave 2, right, or as a wave B, and then we're going up. Now, on this one, we're saying that we're done. So now what happens here into this third wave will tell us if it's a B or if it's a third wave, like I've said before. So I want to see the market really sharply going up here, without looking back too much, right? Without doing any silly stuff up here. Just go 1, 2, and then 1, 2, 3, 4, 5, reach 3 into the 1, 6, 1, 8, pull back to 4, 5, break the trend line, and we're done. We're basically, we finished this wave too low. So we're still fighting this. We're still fighting, and I'm going to try to going to try to keep an eye on it, and we'll see how the next week goes. And we'll get more clues from the market, and then look at it again. So in conclusion, this is what I have so far. I hope you guys understand. If you have any questions, just leave them up as a comment in YouTube. Come and visit us into our Telegram room. I've just posted yesterday another video about kind of a comprehensive introduction to the Elliott Wave principle. So a lot of people that are experienced probably already know all of that. A little bit of history in the first 10-15 minutes, and then the next 15 minutes we're talking about the waves, and I have some examples towards the end. So please check that out. I think it's really interesting. It's going to be part of a 10 or 12 lesson course that I'm going to put up into the Telegram room that I'm going to open. I'll have a lot more details, and every lesson will be about 30 minutes to 40 minutes, and I'm going to talk in details about the waves and the relationships, fibs, pullbacks, and once you complete that, you will be really, really good at Elliott Wave, at least on the theoretic part, and then you got to spend time to look at the charts, but you'll always be able to go back to the course and take a look and see where you're breaking rules, and how you look at the market. Because see, between rules and guidelines and the psychology of the markets, you kind of have to put them all together and look at the market always with an open eye. Okay. So thank you for watching. Subscribe to the channel. If you like this content, maybe you can hit that like button and watch the other videos. And I'll talk to you guys next week. Thanks. Have a great rest of the day. All right. Bye bye.